As 2025 nears its end, there are some things that you want to consider doing to help with your tax situation. And the most important thing you can do is to make sure that you're communicating with your tax professional before the ball drops on New Year's Eve. Here are some reasons why you should consider reaching out to your CPA before the year ends. The first, in 2025, one big beautiful bill was introduced, and we are operating under some changes to our tax code. So you're going to want to make sure that if there's anything in this new tax code that you can benefit from, that you're taking advantage of that before the December 31st deadline. Another thing to consider is if your income has changed compared to last year, and if there are any estimated payments that you should be making before the year end. When our incomes change, so do our taxes. So you're going to want to talk to your accountant and see what changes, if any, are going to be impacting your taxes for 2025. Something else to consider discussing with your CPA is if you haven't had any big stock sales this year. With the market being elevated right now, a lot of folks have made stock sales because the prices have been high. And you're going to want to see how those sales should be treated and how capital gains are going to impact your tax situation. And you're going to want to do that especially before the year ends, because if there's any opportunity to do some tax loss harvesting, you still have some time. Something else to talk to your accountant about is if you have received an inheritance this year. Sometimes inheritances are not expected and are considered found money. And when that's the case, they can also be found taxes. So you're going to want to make sure you discuss these inheritances with your accountant before you spend them or invest them or do anything else with them, and see what impact they're going to have on your existing tax situation. And this is especially true if you've inherited an IRA, because distributions from that are taxable, and they're taxable at your current income tax bracket. So you're going to want to make sure if those distributions have occurred that you've understood how much in taxes you may potentially owe on them. You also want to visit your CPA before you make any charitable deductions. If you got married in 2025, that is something you should also be discussing with your accountant, because you're going to change your tax filing status potentially from single to married filing jointly. And there may be some additional tax advantages that you can take advantage of. And there may be some additional tax breaks that you can take advantage of that you're going to want to discuss with your accountant before the end of the year. If you're also newly retired in 2025, this gives you a great opportunity to start taking control of your tax bracket. Have conversations with your accountant about whether Roth conversions make sense. I know that that's an important step in our process with our clients when we're discussing a Roth conversion, is to make sure it's something that their accountant agrees is going to be effective and is going to be filed correctly. Taking control of your tax bracket is one of the biggest benefits that retiring and not having a forced W-2 income can create. The last thing to check with your accountant about is if you have bought, sold, or refinanced a house this year, it may be a good idea to check and see if any of that transaction is going to have an impact on your tax situation, and if there's anything you should do before the New Year's Eve deadline approaches. If you have any questions about whether you should be reaching out to your accountant, please feel free to reach out to us through our website, hoffmanwealth.com. But the best step may be to just call your accountant, let them know how your year's gone, and see if there's anything that you should be doing before the ball drops in Times Square on New Year's Eve.